Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video I'm going to be discussing swing trading entry point strategy. Okay, get lots of questions asking about what's a good entry point for a swing trade, because as we all know it's much more difficult to execute a good swing trade than it is to day trade. You know, with a swing trade, you're going to be holding for a couple of days, and that's gonna that adds risk. So you want to be more confident in the direction of the pattern. That said, we can identify potential setups, but they don't always follow through. But the key is to identify good setups with the highest probability for follow through and confirmation. Okay, and so the thing that we like to remember is entry point is everything. Okay, E.P.I.E, E.P.I.E. Entry point is everything, because the this is the one time when you're going to enter a stock that you're putting your capital at risk. So when you're going and entering a trade, this is the point of maximum risk, and so it's very important to get a good entry point. A good entry point, and then you're going to have a higher probability of having a successful trade. If you get a bad entry point, you can be behind the eight ball at the beginning, and that can set up a bad trade from the start. So it's all about entry point, and in order to find a good swing point entry point, what you want to do is to be able to identify what is a swing point. Okay, so a swing point is a level on a chart where the chart is setting up for a reversal, and the key is to identify the swing points as they are developing. And so it's a 3 point pattern. And so so let's start off with with down here for playing a stock that we'll start with the swing point high first. Okay, so this is a stock that you are looking to short. So you're looking to take a bearish position, and what you look for first is the first candle makes a high. As you can see, there's this uptrend, and this is the first candle of the pattern. It makes a high, and then the second candle is the swing point high. It's higher than the previous candle. Okay, that's telling you that okay, that's the same pattern that's happening. But then the third candle that comes in it makes a lower high, and it's this third candle here that is the red flag. As you can see, there's this nice uptrend, and then that's followed by this lower high, and that's signaling downside risk. And so for this trade, the entry point for this is for basic, just starting out. You want to get the hang of before you take on more advanced trading techniques. It's good to get this strategy down first. And so the entry point would be on this third day. You would be looking to short this stock. And the theory is that this candle, now that it's made a lower high, is signaling downside risk. And as you can see, there was multiple red days followed in a row, so you could have successfully covered this short and would have had time to profit off of this trade. So this is so to refresh, the swing point high is the second candle, and what you're looking for after so the first candle is a high, and then you make another high, and then what you're looking for is a lower high to signal that the multi-day run is frothy, and that is making it safe for the bears to enter the market. Now this chart could have continued going higher, but it did follow through, and these are just all theories on when to correctly enter a swing trade. Okay, now let's look at the swing point low. Okay, now the first candle makes a low, so that would be this candle number one, and then the second candle makes a lower low. As you can see, it dropped way down here, and then the third candle makes a higher low. And so the entry point on this bullish on going long would be to enter on this third candle. This is telling you, see, there's this multi-day downtrend, and then you've got this extreme low followed by a higher low, and that was signaling to the bulls that the sellers have tired, and that now the bulls can enter the picture. And as you can see, an uptrend started, and that's been followed by this big candle here. So So also when you're looking at lows and highs, you could see this long lower wick and the trading pulled all the way back up and formed this spinning top. This is when you see dojis or hammers or spinning tops formed after multi-day downtrends. That is a bullish reversal setup. That's something you want to look for a bounce. And then also this gap down. See, this was the close here on this candle, and then the open was below it. It's the gap down followed by the spinning top. Those were both, telling you that this is setting up. And then when you had this third candle that came in white on the setup, but with a higher low, that was the bull signal. So the key is that you want to be able to locate the swing points and use those in conjunction. Use those with the candlestick patterns to confirm that your swing point entry point analysis is correct. So yeah, so the key going forward is to be able to identify these swing points and to be able to enter and exit based on this three candle method. Okay, thank you for viewing this chart. I will get into swing points in more detail in further videos, but this is just a start to get you started and to get you thinking about your entry and exit points on swing trades. Okay, thank you very much for viewing this chart. Appreciate it. If you like this information and you'd like to view more, please check out our YouTube channel at mychartcoach.com and our website at mychartcoach.com. Thank you.